Hit that live. Hi,
Hold
everyone,
on.
and welcome to Financial Sins. This is the first Friday of the year, and it is so great to see everyone here today. We have an awesome guest that is with us. Her name is Ariel Jones. Ariel, how are you today? Come on and introduce yourself to everyone, and thank you so much for joining.
I'm doing great. Thank you all for having me. My name is Ariel. I am a credit and wealth coach. I am also a certified tax preparation specialist. So, today I know that you all wanted to talk about some things taxes, and I am glad to be here to talk about it with you all.
Well, thank you again. Ariel, we try to think that it is very easy to do. We think that when we get ready to do our taxes and we just have to get on what's that thing? Which one I use?
TurboTax.
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 Turbo. Mhm.
TurboTax, and hey, my TurboTax is gonna do everything and I don't have to think about it. But I don't think that's true. I don't know. I have a tax professional. So is it important to have one or can we just go out there and do something like that?
So, absolutely, it's very important to have a tax professional because, like you mentioned earlier, the tax laws change every single year. So, one example, a big example. So, a lot of people last year, when they filed their taxes for 2021 in 2022, they were able to get so many credits. A lot of people got large refund amounts. There were a lot of COVID credits available. There were child credits available. There were a lot of different credits that were available last year for people to get larger refund amounts. But this year, all of those credits are gone. So a lot of
Mm.
people are expecting a lot smaller refunds. We're going back to 2019 and before refunds amounts that you will be seeing this year. So people are not happy about that. They are very confused. They don't know why this is happening. So this year is definitely a shock this tax season.
Oh,
so so what do we do? What's the first step that we need to do to prepare for our taxes and to prepare to meet with someone like you?
So for this year, you need to make sure that you have your last year's tax returns, your last year's tax transcripts. You also want to make sure that you have all of your documents. So if you are employed, you need all of your W-2s, of course, from every employer that you've had in 2022. If you are self-employed, you need to make sure that you have your profit and loss statements. You need all of your receipts of your expenses.
So
Of
hold on one
course,
second, Ariel. For those entrepreneurs, what is a profit and loss statement? So is that something we just prepare on our own, or
you can. So you can prepare your profit and loss statement on your own. If you have an accountant, your accountant should be able to produce one for you. Also, some people, especially small business owners, a great accounting software. If you are not ready to make that step to invest in an accountant, but you want to be very organized and you want to kind of have an automated bookkeeping, QuickBooks is great. It's an excellent service that you can use. And with QuickBooks, you will be able to create your profit and loss statement very easily because QuickBooks will keep up with everything through the year.
Mhm.
okay,
Okay.
great. Thank you.
Also, of course, whether you are self-employed or if you are employed with an employer, you want to make sure that you have all of your dependents information as well. So obviously their names, their date of births. You also need an identification document for them. So you will need their social security card. And then you need a current valid address for yourself and your dependents. We also do have to provide you with due diligence forms. They can be signed electronically or in person. Your due diligence forms is just so that we can make sure that your dependents, you can rightfully claim them, and also that no one else can claim them or will claim them, so that we can make sure that we get your refund to you on time. And then If you or your dependent has attended college for the 2022 calendar year, then you will receive a 1098T, and that is for those tuition payments, and you will need those to file your taxes as well if it applies to you or a dependent.
Whoa. Okay, you said a due diligence form? Is that what you
Yes.
said?
So the due diligence form, we use it for all um, people, for everyone who files their taxes. We use a due diligence form, but it's especially for entrepreneurs. Your due diligence form just makes sure that we go over every part of your business to make sure that we are filing your taxes properly and able to make sure that you get all of the credits allowed and that we're making sure you get the maximum refund.
All right. Okay, so make sure that I have my W-2 forms. That's number one, right? To
Right.
bring with me to see you. And okay, so I'm just a person that works for an employer. Normally, what I did in the past was only have my W-2s, and I really always forgot to bring my last year taxes. So do I have to go back and get them, or
No, so you don't. Some people do require it, but if you don't have your last year's taxes, then we can just make sure that we use your due diligence form again to make sure that we have everything is correct, everything is documented. You and I will both go over the due diligence form together to make sure that I'm inputting everything correctly, and you'll be fine without your last year's tax returns. But we absolutely do need your W-2s.
So your W-2s, not, yeah, a lot of people say things like, oh, I can use my last pay stub.
I'm so glad that you asked that because a lot of people do say that. And the crazy thing is, so for this year, the tax season started January the 2nd. And as of January the 2nd, we were allowed to do refund advances, which I'll talk about more soon. But everybody wants their refund advance. As soon as tax season open is January 2nd, the IRS is open. Nobody wants to wait on their W-2s. And the crazy thing is, most employers, they don't, well, by law, they have to send out their W-2s by January 31st. However, if your employer uses an online payroll like ADP is the most common, you're able to easily access your W-2 forms online. So you don't have to wait until January 31st. But for those, a lot of people who don't have those payroll softwares, they are mailing everyone out their W-2. So for the people who don't want to wait, they're like, you know what? I have my last pay stub. Can you file? You cannot file with your last pay stub. Some tax preparers will let you. However, I won't because I know that with the last year's pay stubs, with your last pay stubs and you're not having your W-2s, there is a high probability that your refund can get held up and you won't get it for months. So I don't want to do that. I don't want to make that an issue for you, and I definitely don't want to make it an issue.
whoa. Well, that's something that we haven't thought about, because so many people do it and it's been going on for so long, Ariel. So thanks for sharing that with our viewers. Because you know, that's what we do. Now, wait. So you talked about the loan or the advance payment that people want to get.
Yes.
Why
So
is there such a limit? Everything that I've seen is just $7,000. Most people are not going to get more than 7 this year.
So actually, the IRS places a limit on refund advances every year. So we actually just found out, I think it was like December 29th, that it was going to be 7,000 because before they had said that it was 6,000. They just literally raised it to $7,000 like a week before tax season opened. So the refund advance is $7,000 this year. And of course, that is going to be on your tax refund. So you will get approved on an amount based on what your tax refund is. Once you file your taxes, you do not have to have your credit check for this loan. And of course, if you get the advance loan, that portion will automatically be removed from your taxes once you receive your tax refund.
So does that comes direct deposit? Does that come, because I've also heard people say that the tax preparer gets that money and then distributes it to the filer. So So is that it, or does it go into the tax filer's, bank account, or how does that work?
So that's incorrect. When you file your taxes, you will have the option to choose direct deposit. You can choose to get it on a debit card, or you can choose to get it on a paper check. I like to have all of my filers do direct deposit. So another thing that I like you to bring is a copy of either a check or the top of your bank statement, so that we can make sure that we have the correct routing and account number for you. And that way everything it goes smoothly, because sometimes if you get a paper check and it's mailed to you, or your debit card is mailed to you with your refund on it, then it can get lost in the mail, and now we have to make calls, we have to order new ones, and it's just such a big headache. So the best things to do is make sure that when you file, let your preparer know that you would like for it to be direct deposit, and your refund advance will go direct deposit as well. So it's not a separate process. Whenever you file your taxes, you just let your preparer know that you would like to apply for the refund, and it's done right then and there. It's one simple form that you have to sign off on, and it's all done at the same time. So it's not something additional that you have to do.
Oh, good.
Wow.
And you can get your refund advance the same day.
All right, now Ariel, I have a question for you.
Okay.
All right, how long you been doing this? Because
How long?
you look like you just got out of grade school.
Well,
did you?
I can tell you, I've been out of high school for 10 years. So no. As for taxes, I just recently started doing taxes. I started studying on taxes about a year ago to prepare for this upcoming season. As far as the credit and wealth coaching, I have been studying credit for about 4 or 5 years. I recently started my credit repair business 2 years ago, and then I recently transitioned into coaching about 6 months ago.
So if someone has messed up credit and they're filing their taxes, could whatever company dig into or tap into their taxes and take some of that refund?
So that is a loaded question.
I know.
I'm going to say the reason that the question is so loaded is yes. So things like that happen all the time. If someone a creditor that you have been delinquent with, if they choose to sue you and they choose to file a judgment on you, and with the judgment they decide to garnish your wages or garnish your taxes, then technically they can do it. How often does it happen? Sometimes. Is it legal? None of the time. So that's why I said it's a loaded question, because with me, the way that I repair credit using the law. So I'm a consumer law expert as well. So a lot of people who repair credit, they may just know how to repair credit, but they may not know the laws behind credit. So with consumer law, and when I say consumer law, we're talking about the Truth in Lending Act. The Truth in Lending Act outlines FCRA, which is the Fair Credit Reporting Act, and it also outlines FDCPA, which is the Fair Debt Collection Practices Act. So your Fair Debt Collection Practices Act is going to provide rules, regulations, and bylaws for of course, debt collectors. So any collection that you have in your report, if you have a charge off, that is outlined by FDCPA, and it governs how they should operate in commerce, right? And then the Fair Credit Reporting Act, it defines, our rights as a consumer, and it also provides the rules, regulations, and bylaws for credit reporting agencies. So within that, once you understand your rights as a consumer, what it means to be a consumer, and how each of these agencies should be operating in commerce in relation to you, then you will find that a lot of things that people deem as normal or acceptable or they think is legal is actually not legal. So that's why I said yes and no.
Wow.
Wow, well, girl, you know
Ariel,
your stuff. I don't care if you started yesterday. You know
hey,
your stuff.
Thank you.
Ariel, I have a few questions. First, I want to say thank you for coming on the show. I mean, you are very knowledgeable in the
Thank
information
you.
sharing with our audience out there, and we want you to come back again. Let you know that,
Thank
right?
you.
Very knowledgeable. Thank you for coming. Just a few questions. With the changes that's happening with our taxes now, do you think that it has anything at all to do with the IRS or the government trying to recoup some of those funds that they have given out to the American people from since COVID, 2019, all the way up through 2020 and part of 2021, going to 2022? So, do you think this is a way that they are recouping a lot of, I would call it a loss with the IRS because they gave millions of dollars to people to basically help, build their funds back up. So is this the way that the IRS is basically trying to recoup with all these new changes that's coming about?
Well, one could view it that way. However, I personally don't think so. And the reason why I say that is because they are not necessarily changing the laws regarding your taxes. So I won't say that people will owe more than normal. I will just say that there are not as many credits available. So your credits are what is allowed to you when you file your taxes. So all of the credits that were available last year during COVID, I think those were so to speak, a break for us because everyone was home during the pandemic. A lot of people's businesses were closed. A lot of people's children were home from school.
Hmm.
So we had to take care of our children. Well, we would have been taking care of them anyway, but they're not at school every day like normal. So I think that was kind of like a break or an extra help that the government provided to us. And I think that they're just not doing it anymore. They're like, okay, enough help. You
Yeah.
know,
Okay.
that's it. This year, back to normal because
Back
it's
to normal.
different than pre-COVID. They haven't made the refund amounts less than pre-COVID. It's just that everybody got so used to, last year people were getting $20,000 and $30,000 refunds
I wasn't
easily.
fortunate enough to get that.
No.
But another thing I want to talk to you about after you finish your comment, I want one other ask you one question. Go ahead and finish that comment.
Oh no, I was just saying a lot of people they were getting such large refunds because we had the child tax credit, of course, and we have the child tax credit this year too, but last year the child tax credit was up to age 17 and it was more than it is this year. This year it's only up to age 16 and it's almost half of what it was last year. Well, it's significantly less. And then we had the sick leave credit last year, which was up to $64,400. This year, that is gone.
Some people know how to work that thing too.
Yes, exactly. And then, of course, last year we had our stimulus as well. This year we don't have a stimulus. So
Mm.
those are key differences in what you'll be seeing this year.
What about the 1098? I think you call it 1098T form, the college tuition.
Yes. So that is for if you attended college or one of your dependents attended college, your tuition payments will be on that 1098T. They'll be accounted for, and that allows for a credit as well.
Oh, okay. Is that something new? Or that was always in effect?
It was always there.
Okay, all right. That's
So
great.
the only credits we have this year are children and basically the college.
Pretty much, yes.
So
Wow.
nothing for anything else unless you are self-employed, then you can get some write-offs, right?
Right. But the thing about write offs, so before I actually got into taxes, I thought that write-offs were good. Like everybody wants to write off as much as they can so they won't have as much of a tax liability. But I learned that depending on how much you have made in your business and depending on if cuz we know some people who are self-employed are 1099. They're independent contractors, and then the rest of us, we're filing a Schedule C. So depending on if you're 1099 or Schedule C, depending on if you have dependents or you don't have any dependents, is all going to determine whether write-offs are best for you, and if so, how much in write-offs are going to be best for you.
Hmm.
Because you don't always want to show your business as broke, right? I mean, we grew up making sure that your business, took this loss for the first 3 to 5 years.
Right.
So
And the other thing about that is a lot of business owners, because of that, traditionally, like you said, that's what we've been taught to do. But when it comes time for you to purchase a home, boy, oh boy, that's when you're going to feel it. So you have to know as a business owner, what your goals are for the year and the next 2 to 3 years, because in order for you to purchase a home as a business owner, you do need 2 years of tax returns. So if you've been making all of those write-offs, you're not going to qualify for a home. Your DTI is going to be way too high, and you're just not going to qualify.
Hmm.
well, you have taught us a lot. And let me ask you this, because with me having a young person in my life, my son, it's really kind of, he doesn't know exactly what to do when it comes down to taxes. When he was first 18, then of course we had someone that handled his taxes. Now he's in his 20s. He's self-employed. He does get 1099s. And I'm not sure, should I just say, hey, go to H&R Block, or should I say, hey, find Ariel? Which one is better? And then are you out there seeking kids your age that's just holding on and not filing their taxes? And then what? The other thing that, let me ask, put another point here, is because of affordable health care, I'm really not sure whether or not I should let him file his own taxes, because he should still be something on mine or whatever. So I had a lot, but okay.
How old is he?
He just turned 26.
Okay, so he's in the same boat with me. He shouldn't get docked because he just turned 26, so he shouldn't get docked for not having the health care this year. As far as him having a 1099, does he have children?
No.
Okay, he's most definitely going to owe. He
Most
there is no way around it. And the thing about it is, if you carry him, instead of letting him file on his own, there is a possibility that not only will you owe based on how much income is reported on his 1099, but because of the fact that he's older than 17 and you're claiming him and he has income, there's a possibility that you can be audited.
Oh, okay. All right. Gotcha. Okay. That's understandable. Okay. All right. So most times I'm looking at young adults who are just not filing, and I'm not sure why they don't file. They are, they work, but they don't file taxes. And so, what's the message to them?
A lot of times, and I'm not embarrassed to say, I previously, when I first started out my journey as an entrepreneur, because I began as an entrepreneur in 2018. I didn't file my taxes for a long time.
Right.
I honestly, I did it until I had my daughter. And I think the reason why most people don't file, especially my entrepreneurs, is because they're afraid that they're going to owe. Entrepreneurs are in the high, well, I'm not going to say the highest, but we're taxed the most heavily, in comparison to W-2 employees. So what you can do is if you are an entrepreneur, if you go ahead and you hire an accountant, someone who does accounting and they also do tax preparation, you can prepare to put your taxes to the side and you can pay quarterly. So you don't have to pay a big lump sum every single year. So that's something that can be done. Also, if you are employed, if any of my young people are employed and they're still afraid, if you're employed, as long as you made a decent amount of money, you will get a refund. You won't owe. Just make sure that you are not filing exempt, because a lot of young people as well, they file exempt all year long because they don't want to get their taxes withheld, and they think at the end of the year they'll still get something back. You're not. So just make sure you take out the right amount of taxes if you are employed. If you aren't employed, just sit that money to the side along and along so you can pay your taxes quarterly and you won't have a big surprise.
Okay, great. Because I think all of us now are not looking for refunds, or we shouldn't be for 2022. We should just be looking, oh God, please keep my amount that I owe IRS under, under $1,000, under $500. I think that's going to be the case this year.
So a lot of people, especially if you're 1099, you are going to owe. However, if you have dependents, because we still do have our child tax credit, right? Even though it's not as much as it was last year. Um, there is a great chance if you at least have one dependent, whether you are W-2 or whether you are Schedule C. I'm not going to say 1099 because 1099 is different. But if you are Schedule C or you are W-2, there's a great chance that you won't owe anything if you have at least one dependent. The more dependents you have, the better.
More dependent. Don't be telling people to have more babies.
No, they have more babies, but I just don't want people to think they'll owe, because actually, I just had someone yesterday. They wanted me to file for both of them. She has two kids. She wanted me to let someone else file one of her children, and she filed her other child because she didn't work the whole year. And I'm like, you don't need to do that. Claim both of your children, okay? Because you will be able to get a refund even though you didn't work the whole year. So I just wanted to specify with that.
Awesome. 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 So, for those of you out there and just joining us, we have Ariel Jones who's with us today, Miss Assets, and you can reach her at 678-990-6610 or at missassetsconsulting.com. She is on IG and also on Facebook. I think that's where I found her. And
Yeah.
so we ask that you, if you have any questions about your taxes or need to have them done, you can definitely reach out to Ariel. And also, you are what do you call it? A credit professional, credit specialist.
Yes, I am a credit and wealth coach. I do have a credit repair business as well. And then I have a credit repair coaching business as well. So, um,
So, how do people sign up for your credit coaching business?
for credit coaching, I do have one-on-one mentorship, and then I also have the Credit University, which is a program that I curated. It took me so long. The program is about 6 months for the book part of the program, and then I continuously add content. So in the Credit University, I teach all things credit, starting from how to read your credit report, right? Going over each type of the derogatory items, what they mean, how to structure a perfect credit report. So, what should your credit report look like for you to be able to maximize your score? I talk about the different types of scoring models because that's something that's a big controversy as well. So I break down the different types of scoring models. I talk about consumer law and how to use consumer law. So when I say that, I'm talking about FDCPA and FCRA. I go over all of the laws for each account type, each round, how to dispute it. I go over building your credit once you remove all of the negative items. I go over how to leverage your credit to get business funding. I go over properly structuring your business. That's why the program is 6 months, because it's literally almost everything that I know It took me forever to film. So that's one option. And then with the Credit University as well, you get a Facebook support group. So you're in a community with other like-minded individuals. Everybody can learn and grow together. And then we have bi-weekly coaching calls that are live. So you can ask me questions. So we make sure everyone is on the same page. Nobody is lost. So that's one way. And then if you are a person you don't want to learn for yourself, which I always recommend learning for yourself, because if you teach someone to swim, they're good forever. But if
Yeah.
I'm doing it for you, that's just for that point in time, right? So
Right.
if you don't want to, because some people they just don't have the interest, they don't have the patience to learn. I do have a program where you can just sign up and my team will handle it for you. And all of my consultations are free as well. So
All right. Well,
Ariel,
awesome.
that is absolutely, absolutely wonderful. I mean, a whole university dedicated to understanding credit and how that works. Now, the biggest question that I have, because I've been on this credit journey, to be honest, and the biggest question that I find that I'm always trying to find the answers for is that Vantage score. Is it really worth anything? Because the Vantage score and the FICO score, you know, generally are so drastically different. And then when you're applying for credit, there are all these different FICO score, an auto score, homes, all of these different scores. Is the Vantage score relevant?
So I'm glad that you asked that. And that's what I meant by the differentiation in scoring models. So the Vantage 3.0 score, and this is most widely seen on Credit Karma. Everybody knows about Credit Karma. Almost everyone uses Credit Karma. And they say, oh, Credit Karma isn't accurate. It's not that Credit Karma isn't accurate. The Vantage scoring model in comparison to the FICO scoring model. So you know that we have different FICOs, right? You have FICO 8, FICO 9. They just came out with FICO 10T. The most common FICO score used by banks and lenders is FICO 8. Okay, so I just want to talk about Vantage 3.0 versus FICO 8 for 1 second. Even though they both are scoring models, I use a comparison. So when I explain to my clients, I say it's like the metric system versus the American system that we use. So even though it's the same thing, if you're talking in centimeters and I'm talking in inches, we might be talking about the same thing, but it's weighted differently. So the key factors that are used to calculate the score in the Vantage are weighed differently than the factors that are used to calculate the score in FICO. Okay, so that's the difference between the two of those. As far as when you talked about your FICO for your bank card score, your FICO for auto, your FICO for mortgage, those are weighted differently based on the industry, right? So, for example, let's say if you were going to get a mortgage, right? Your FICO mortgage score, if you have a bankruptcy on your FICO mortgage score, it's going to be, I'm sorry, I didn't mean to say a bankruptcy. If you have a foreclosure on your FICO mortgage score, it's going to be on your credit report, it's going to be lower on your FICO mortgage score versus that same FICO credit report just measured in your FICO auto score. That foreclosure is not going to weigh as much. So your FICO auto score is going to be higher. But let's say if you had a repossession on your credit report, right? The repossession is going to weigh higher on your FICO auto score than it would on your FICO mortgage score. So those things are weighted differently based on the industry. So even for example, let's say if you have a charged off credit card, your charged off credit card is going to make your FICO bank card score lower than your FICO mortgage and your FICO auto, but we're all talking about the same score. You see what I'm saying? So that's the way that works.
Yes.
Golly. Now you are just like a light bulb. Yes. Yes. That makes so much sense.
That's how that works.
Oh my gosh.
So when we tend, because you said things like charge-offs, foreclosures, repossessions. So it's important, like for charge-offs. So do you go back and pay them and then they remove it, or
So no, that's you are hitting all the points that everybody always asks, all the most common misconceptions. Like you are coming at me with them. Like I feel like you went into a group and looked up all the questions.
I didn't.
But no, so when it comes down to charge-offs and repossessions, I don't tell anybody to not pay debts. Okay. I'm not gonna say don't pay your debts. I just provide information. So the information that I give, if you pay a charge off, if you pay a collection, it's going to report as a paid collection. In the lender's eyes, rather it's whatever. It can be a mortgage lender, it can be you can go get a loan, whoever. They don't care that you paid it off. They don't care that you actually settled your debt or any of that. They care that you ever were delinquent in the first place. So it's not going to help you at all. It doesn't help you. It's still considered derogatory. However, on your Vantage score, here goes the differences again. On your Vantage score, your score will go up. On your FICO, it's going to stay the same. Right, but no one uses Vantage. All of your lenders are going to use some form of your FICO score. So paying it does not help you. If you want to pay it, that's on you. It's not going to remove it. It's not going to make the account update to a positive account. It's just going to say paid collection. And on top of that, if you pay a collection or a charge off and then you try to dispute it, when you pay it, it's like you are taking ownership of that debt. You're taking responsibility for that debt. So it's going to make it harder for you to dispute it.
Gotcha.
Wow.
Whoa.
That's valuable. That's valuable information because people are taught the exact opposite.
Yes, trust me, I've seen it so many times. I have had hundreds of credit repair clients, and a lot of people they'll call me and they'll say, like when I'm doing my consultations, because in my free consultations, I go over your report with you, and I'll go over each account during the consultation, and they'll say, "Oh, that should have been off. I paid for that." Did they tell you it was going to be off, or did you just assume that because you paid it doesn't mean that it's going to be off? It's still there. It's just reporting as paid, which is still derogatory.
So you can get your FICO score on your bank accounts, right? And that I think it's there where that one places, right? Your bank.
So it depends on the bank. It depends on the bank. Some banks provide Vantage, some provide FICO. Most of them provide FICO, but some of them, like if it's like I want to be politically correct, a non-mainstream bank, they will provide a Vantage score because it's cheaper to get access to your Vantage score. But if you want to see all of your scores, like Renetta talked about, the FICO mortgage, FICO auto, FICO bank card, everything, and you want to make sure that you're viewing the accurate scores, myfico.com is going to be the best option for you. Experian also shows the FICO score, Experian.com. You do have to pay for the subscription in order for you to get your FICO score for TransUnion and Equifax, but the free Experian membership shows your Experian FICO score.
Your Experian FICO score. Okay. And then the bank will show you. So just don't really believe my Credit Karma bank, my Credit Karma score, right? It's good.
Try to not believe it, but just know in the back of your head that's your Vantage score. So it's not what lenders are looking at.
Okay.
So again, we need to understand our FICO score and the different FICO scores because that's what lenders actually look at. So the Vantage score is pretty, but the FICO score.
Right, exactly. And then another thing too that I tell people, because a lot of people when we talk about scores, they see that as the most important thing. They grab hold to that and they're like, oh, I want to have this score or whatever the case may be. They keep that in their head. But the other thing too is I tell people that your credit score is simply a numerical representation of what's on your credit report, right? So you want to make sure that your credit report is structured properly versus making sure that your score is whatever number that you want it to be in your head. Because there are some people who come to me with a 790 or 800 score, they can't get approved for anything. Versus I might have another client that has maybe a 650 that can get approved for more than my client with an 800. So your report is really what matters the absolute most. Your score is secondary because it's simply a numerical representation of what your credit report tells lenders about you.
Okay, one more question, Ariel. I've heard you say repeatedly what your credit report looks like structurally. How is structured? What does that mean?
So what that means is there are several key credit factors that go into calculating your score, right? So the first one is going to be your payment history. That's the most important credit factor there is. So you want to make sure that your payment history is immaculate, okay? 100% payment history, not 99, not 99.4. It needs to be 100%. Even one late payment can have a drastic effect on your credit score. Okay. Yes.
100%.
Yes. You need to have 100% payment history all across the board. And I want to just let you all know how important your payment history is. So I have a lot of people who come to me wanting to remove their student loans. So let's just for ease of numbers, let's give an example. If you have a student loan that is 5 years old, most people's student loans are 10, 15, and 20 years old, right? But I just want to make it 5 just so I can do simple numbers. If you have a student loan that's 5 years old, and let's say your student loan is in deferment, because once we graduate, we have 6 months of deferment, or if you go back to school, it's in deferment. If you're on an income driven repayment plan and it's zero, then it's technically still deferment. You're getting positive payments as long as it's in deferment, or as long as you're on that payment plan, right? You're getting on time payments each and every time. So let's say for 50 months, you are able to get positive payments, whether you made the payment, it was in deferment, or what have you.
Right.
And then once it's out of deferment and it's your time to pay, you're out of, let's say you get a new job and you're out of your income driven repayment plan, right? And you miss 10 payments. So you get 30, 60, 90 days late or what have you, right? Now you have an account that is 5 years old. You have mostly positive payments, but you have those 10 negative payments. So with you having so many late payments, you having 10 late payments, that account needs to be removed. It's going to be difficult for me to get all 10 of those payments forgiven because it's so many, right? But if I remove the whole account so that I can remove just those 10 late payments, you may have lost the 10 late payments. I'm sorry, you may have been able to remove those 10 late payments, but you also lost the
Something you have for 5 years.
the 50 positive payments, right?
Yes.
So your credit score is going to drop lower than it was before than when you had the late payment. So a lot of people get frustrated. They get so mad. They're like, my credit score was this and now it dropped 100 points. Yeah, it dropped because that student loan was so strong. Number one, it was your oldest account. So that's another part of how your credit report should be structured. You want to make sure that your credit age is at least 5 years. 7 years is going to be the sweet spot. That's the best, or most optimal, or anything over 7 years is going to be most optimal. But 5 years is still good. Your credit age needs to be as old as possible because it lets lenders know that you are experienced, right? So when you are experienced with credit, they are more willing to lend to you. Each and every time that you close an account. So let's say if you paid off an auto loan, you pay off your mortgage, those accounts are getting closed. It's re-aging your credit each and every time. So now that I removed the student loan, going back to that example, not only did you re-age your credit, but you took away 50 positive payments. Even though you got rid of those 10 negatives, you really did a bigger detriment to your credit score. But guess what? Now your report is strengthened because you are back to 100% payment history. You just have less. So now you have to build it up again. You have to go create another payment experience so that you can let that age out and that you can create more positive payment experiences.
All right, let me ask you something.
I'm glad I'm old.
How did you become so passionate with this? Because I can hear it all in your voice. I mean, it's like you eat, sleep, dream, uh, all this all the time. But along with that, I'm going to ask you another question, but answer that one first.
It's just something that I really enjoy doing. It's something that I love. I love educating people because a lot of people, they are just not aware. So many times people come to me and they say, I wasn't taught about credit. My mom didn't know about credit. They didn't teach this in school, or, whatever their thing is. And I'm like, just because of the fact that you weren't taught it does not mean that you shouldn't know it or that it's too late for you to learn it. You can always turn it around. And the power of credit is so great. I've been able to do so many amazing things. And I personally had my own struggles previously. I'm not going to make this about everything that I've been through, but I personally had my own life struggles, and I was able to educate myself on credit. I was able to change my situation. I was able to learn the power of credit, understand the power of financial literacy, and really make a difference in my own life. So I enjoy helping people do the same. So that's why I'm just so passionate about it, because I've seen it. This is not something that I just went on YouTube and I searched and I'm regurgitating to you everything somebody else said. This is something that I have experience doing. I've done for myself, I've done for other people, and I've seen it work. So that's where my passion comes from.
Wow. Let me ask you one last question here. What about those who have LLCs?
Yes. What about it?
And it comes to filing taxes and what have you. You covered a lot for the 1099, the 1098.
Mm-hmm.
So those who are LLC, and they do you handle that? Do you deal with that as well?
Yes. So your LLC, if you have an LLC, you will file a Schedule C. Your Schedule C can be filed under your own personal taxes as well, but the Schedule C is specifically for your business.
Okay.
Okay.
All right.
Yes.
All right. Listen, girl. Listen. I I was waiting for Tanya to put your number back up, but listen, you are a jewel in our community. You are in. Are you in Savannah?
I am.
All right. All right. Can anything good come out of Savannah? Y'all better look. Y'all better look. Y'all better listen. Can anything good come out of Savannah? Yeah.
Well,
You
Ariel,
are a jewel. Thank you.
Thank
yeah,
you.
we want to thank you so much for joining us today. We are running out of time, and you have definitely given us a whole lot of information, and we want to invite others that are out there. And when you're watching the show again, make sure that you reach out to Ariel to get your taxes done or enroll in her credit university, because she is a wealth of knowledge. Her information is down at the bottom, but you all can surely reach her at 678-990-6610, or reach her on Instagram at Miss Assets. And she also has a website, right? missassetsconsulting.com. And we thank you again for being with us. I am Tanya Scott Pilcher, your insurance professor. And again, I just want to say, live life like there is no tomorrow.
My name is Anthony Murray, your financial literacy educator here in Rankin, Georgia. Thank you for being with us. We love you.
Hi, I'm Renetta Milner Gardner, and I close by saying, make it a great day. Thanks, Ariel. You were
Thank
amazing.
you.
Hey, and this is Math Flow. I'm not crazy, but I am mad about making a difference for the life of others through financial literacy. And this is what we do every Friday at 1 p.m. Thank you so much, Ariel. You are absolutely knowledgeable in all the information that we ask. And girl, you got a future ahead of you. I already see that. Thank
I'm
you for being blessed with this show. So that's it for today, ladies and gents.
We'll see you next week.
We had no commercials today. I noticed that. No commercials.
There was so much great information. We didn't
We just didn't break for it.
couldn't even
Okay.
we couldn't break.
Couldn't
All right.
break for the commercial.
Thank
All
you,
right.
Ariel. We'll see you later. Bye.
all right. Bye-bye.
Like that.